But let's actually stick with Adani for now. It is really top of mind. All of the flashes are still on your screen. We have Prakash Diwan and Jigar Mistry joining us to really help us make sense of this, as well as the market moves as well. Prakash, Jigar, thanks a lot for being with us today. And Prakash, let me just come to you first. Right now there's not too much which has come through other than the Supreme Court saying that 22 of those 24 cases have been completed by SEBI. They have 3 months to complete the remaining 2 as well. And a full show of confidence in saying that, SEBI should conclude this investigation. And there's no reason to really move this to the CBI. So your thoughts on that, and how would you read it? Sticks with the regulator.
Thanks, Petra, for this. I think the key takeaway from this Supreme Court decision or verdict is that, the faith in a regulator stands sacrosanct. On a standalone basis, they're doing their job so brilliantly. There's no need to kind of, cast any kind of doubts or aspersions on their ability to complete this investigation, however complex it may be. So I think the market takes that as a message that nobody can come like an Hindenburg coming and, making some sort of a tall claim about things which eventually don't, prove to be ratified or validated, and the market doesn't need to respond or react so negatively. So this is a great learning for, if you, as an investor, what I see is that the confidence that everybody will have in the system, in the regulatory environment is going to be immensely strong. So at least you won't have a repeat of this happening. Otherwise, every 6 months, there would be somebody who would come and start doing things for so many names and so many companies. Secondly, if you look at the stocks, while there was this build-up in terms of the positive outcome, there was an expectation. Stocks went up today. For example, Adani Enterprises made a high of 3199, and it's probably $100 lower from there. So what it tells you is that this is a classic example of buy on expectation, sell on the event. So that's probably panned out. Out of the 20, the remaining 2 investigations that SEBI probably has been asked to continue with, I don't think there could be anything which will probably start putting all of these names, all of these stocks, all of these businesses under a cloud. In fact, look at some of the businesses like Adani Ports, for instance, right? I mean, it's a business that has actually today available at an all-time lifetime high. It's not about a 52-week high. It's not about the high it makes from the low of 375, 390. I don't remember exactly, but when the Hindenburg issue came up, it went all the way to sub 400. It's now back to a decent level. It tells you very clearly the faith that people have in businesses and not news around businesses. So there is, yesterday they came up with an update on the kind of tonnage that they've managed to undertake, the cargo handling, equipment, the ability that they've demonstrated. So I think all in all, market is a slave to earnings, slave to the business model, the growth, and that's what's coming to the fore. I don't think the Hindenburg issue will probably be a cloud anymore on any of these names or any of the other groups that we keep on hearing about, being likely on the radar for some short sellers like that.
Okay, in fact, what Prakash said got me checking up the other stocks as well. Ports, of course, is at, those historic high levels. Adani Power is about 3.5% away from its 52-week high. And then you have Adani Energy. These are some of the companies where the recovery has been very, very swift. But then you have, other names like Adani Total Gas, which is still a good 70% off from the 52-week highs that we saw last year. So, that's just the way traders played out on these stocks. Extremely volatile ride in the last 12 months. We have Jigar Mistry of Buoyant Capital also joining in. Jigar, good to have you with us. Season's greetings and wish you a happy new year. Now, just from a, portfolio manager perspective, how do you think, the fraternity is going to look at the entire group now? Because the situation was such that there was a lot of uncertainty. Today's judgment, does it get the market back to fundamentals and then deciding on, what they want to do with the Adani stocks? Because it's a large part of the market, and some of the companies are very, very big in terms of market capitalization and cannot be ignored.
Yes, Sudhi, good morning. Thank you for inviting me as always. I think, yes, I have not really been, as a portfolio, we have not invested in these stocks for a while now. But I think whoever is keen and watching this, I think part of it, as I think Prakash also mentioned, that you have taken it into your stride and said that most of this was like a foregone conclusion. People had reposed their faith and continue to track the businesses. And from the fall, as you also mentioned, it's not something that all the stocks have come back to the level they were before the event occurred. So I think it's back to the business fundamentals within their kitty. My sense is that ports is one business which is very difficult to ignore. They contain almost 40% of the cargo as far as certain cargoes are concerned in the India sort of landscape. And therefore, that business is a lot more interesting vis-a-vis anything else. But as I said, see, as a portfolio, we are not invested in any of these names. So beyond that, I don't really have a comment to make per se.
Okay, so that is on the Adani group of stocks. I, Jigar, quickly want to, squeeze in a few questions on just the markets as well, since we have you and Prakash with us. This morning we were chatting with Bernstein, and the reason that they expect pretty moderate returns is not because there's any big risk, just because they can't find too many opportunities in this market. They've also gone ahead and downgraded the mid and small caps. Your thoughts on just these the broader markets?
Hi, Pavitra. Yes, so see, in November and December, we are up something like 14% on the Nifty. Now, sort of you look at it from this standpoint that it's after GFC 2008-9, it's only happened 3 times before. One was 2013, and then there was post sort of COVID recovery, couple of instances, and the third one is now. Now, what's fueling this is either the BJP victory in the 2 states, or the Fed actually cutting, or not really cutting, but announcing that they are not really reluctant to not cut rates going forward. And both of these instances were to some extent sort of baked in, right? There were 224 seats where BJP had more than 50% vote share even in 2019. So if you had asked me before getting into those results, I would have said that if BJP doesn't win, there was a reasonable downside to go ahead. And even with the Fed, see, in the last 3 months, they have added $1 trillion in debt. Now, the rate cut could, to an extent, be politically aligned with the ruling administration, but we are not running away from the fact that the rates will need to stay higher for longer until the time, the de-dollarization debate gets settled down. Now, in all of this exuberance, we're looking at the money which is coming in both from domestic and international investors going into sectors which is not making a lot of sense. For example, utilities. And you look at the breakdown of utilities sector, how distribution is almost a 1 lakh crore loss. And if say, state and central governments keep on, at each other, then how is this sector going to get resolved, leading to a sustainable demand? Look at autos, for example. Autos, a very strong recovery in the current year, but a large part of it is disregarding the fact that the volumes are tepid, A, which we saw part of it yesterday. B, there is a huge disruption that we are likely to see, and we don't really know the sector, how it remains. And C, there is a large part of embedded value which we don't know which one of those companies will get aligned to. Last month, IT was up 10%. Like, you have nothing else to buy, you just go ahead and buy something that hasn't really worked. Fundamentals clearly are not improving in that sector. So very little reason to buy even that sector. So I think what we are doing is we are borrowing a lot of returns from the future. And that would likely imply that even if at the horizon there are no risks which are apparent, you will likely end up entering a scenario where you don't make a lot of returns or very subdued returns for a reasonably longer period of time. We have seen this before, right? When we are in this cycle, it looks like the cycle is never going to end. The cap cycle. Yeah, please go ahead.
Yeah, Jigar, I'm so sorry I'm interrupting today, because of the Adani story. We kind of, had a lot to contend with, and we do have to take a break. But in a nutshell, give us your top 2 or 3 investment themes or ideas for 2023. We are just 10 seconds on the chat now.
2024, yes.
2024, sorry.
Banking financials clearly stays 1. Be reasonably lazy to deploy cash would be another. And large caps over small and mid caps.
All right. Thank you very much. Sorry for the abrupt chat today. It's just too much of news flow. Prakash, thank you very much for stepping in as well and helping us make sense of this Adani news. Catch up with you as well later in the course of the week. Right now, we have to take a very, very quick break. We'll come back on the other side and have lots more on the market. We'll, of course, be looking at a lot of the commodity action.